Imagine for a moment that you never had to walk into a bank again. No waiting in line, no handing over your credit history like a report card, no nervous glances at the loan officer, hoping they stamp approved instead of denied. Now picture this. Instead of Wells Fargo or JP Morgan holding the keys to your financial future, you hold them yourself. You are the lender. You decide when, why, and how to borrow. Welcome to what I call the Bank of You. This isn't a fairy tale. It's a financial strategy hiding in plain sight, wrapped inside a product most people misunderstand: life insurance. Not the dull kind your uncle complains about at family dinners. Not the paperwork you sign just so your kids get a check when you're gone. I'm talking about a version that builds cash value while you're alive. A version that can be borrowed against, a version that can quietly grow into one of the most flexible financial tools you'll ever own. Most of us have been trained to see retirement plans like 401ks or IRAs as the golden path. Put money in, lock it up for decades, then hope the market gods are smiling when you finally reach 59 and a half. Until then, that money is a prisoner. You can't touch it without paying a penalty. You can't use it to buy a property or start a business when opportunity knocks. It just sits there. But there's another way. A whole life insurance policy doesn't just give your family a payout when you die. It builds a reservoir of cash that belongs to you while you're still here. That reservoir earns interest, often guaranteed, and can sometimes even pay dividends. And unlike your retirement account, you don't need to beg permission or pay penalties to use it. Here's the part that flips the script. You can borrow against that growing pool of cash, not from a bank, from yourself. That means no credit checks, no awkward questions, just access to funds you've already built, ready to deploy into things that actually grow your wealth. Rental properties, a business, even covering education without draining your savings. Now let me pause here, because I can already hear the skepticism. Isn't life insurance just an expense? That's how most people see it. But think about this. You don't call your retirement contribution an expense. You call it an investment. Same with buying real estate or building a stock portfolio. A properly designed life insurance policy belongs in that same category. It's a tool, and like any tool, it's only as good as the hands that use it. This is where the strategy becomes powerful. When you borrow against your policy to fund an investment, you're not draining it. The cash value keeps growing as if it never left. Meanwhile, your borrowed money is off working for you somewhere else. That's like planting two trees with one seed. One tree grows quietly in the background. The other starts producing fruit you can actually eat. To make it clear, let's walk through a simple story. Imagine Sarah. She's 35, earns a steady income, and wants to start investing in real estate. Instead of draining her savings for a down payment, she taps into the cash value of her whole life policy. She borrows the funds at a lower rate than any bank would offer. She buys a rental property. That property generates monthly income, and she uses a slice of that cash flow to pay back the loan she took from her policy. What happens next? Her rental property grows in value. Her insurance cash value continues to rise, and she never had to beg a bank for approval. That's the Bank of Sarah. This is what separates financial survivors from financial builders. Survivors hope their retirement accounts will be enough someday. Builders create systems where money works in multiple places at once. And here's the real kicker. Most banks already use this exact playbook. They borrow your deposits at rock-bottom rates and reinvest them into loans, real estate, and securities. That's how they make their profits. When you use a life insurance policy as your personal bank, you're playing the same game. Except the winner isn't Wells Fargo. It's you. That's the opening section. Would you like me to continue with part 2, where I expand into the big 5 benefits: guaranteed returns, dividends, tax-free growth, policy loans, and death benefits, with new examples and insights woven in? Let's talk about the 5 quiet powers inside a whole life policy. Think of them as hidden switches most people never flip. The first is guaranteed growth. While your 401k rises and falls with the mood swings of the stock market, a whole life policy grows at a fixed rate, often around 3%. That number might not sound thrilling, but steady growth is like gravity. You don't notice it until it's gone. Ask anyone who watched their retirement account shrink overnight during a market crash. Guaranteed growth is boring in the best possible way. It means your money is compounding while you sleep, rain or shine. The second is dividends. Some insurers pay a share of their profits back to policyholders. Think of it as being a silent partner in a business that always writes you a small bonus check. Those dividends can be taken as cash, used to reduce your premiums, or reinvested into the policy to grow even faster. It's like getting a surprise tax refund every year, except it doesn't depend on the government. The third is tax-free growth. Every dollar your policy earns stays inside the account without being sliced by taxes. Contrast that with selling a stock or crypto token for profit. You owe taxes right away. With a policy, the cash keeps growing, untouched. That gives you more runway and more money compounding on itself. Over decades, this difference is massive. Imagine two runners. One sprints forward with no obstacles. The other stops every mile to hand over part of their energy to the tax collector. Guess which one finishes with more strength? The fourth is policy loans. This is where the magic lives. Once you've built up cash value, you can borrow against it for almost anything. A down payment on property, starting a small business, covering education costs, even buying a car. The interest rate is often lower than the bank, and unlike a bank loan, there's no credit check, no invasive questions, and no rigid payment plan breathing down your neck. If you skip a payment, your policy doesn't vanish. The loan simply balances itself against the cash value over time. That freedom is rare in finance. The fifth and final piece is the death benefit. Most people think that's the whole point of life insurance. A payout to loved ones when you're gone. That matters, of course. It provides a safety net when your family needs it most. But here's the secret. The death benefit is actually the least interesting part of the policy. The real story is everything it can do for you while you're alive. The death benefit is the cherry on top, not the sundae itself. Now let me put this all together. A well-structured whole life policy is not a get-rich-quick scheme. It's a foundation. Think of it as a vault you can open whenever you need. Inside the vault, your money grows steadily, earns occasional dividends, avoids taxes, and waits patiently until you decide to put it to work elsewhere. At the same time, the vault doubles as a shield for your family if something happens to you. This is how people quietly build dynasties. Not flashy day trading, not chasing the latest meme coin, but creating a system where money is safe, available, and always compounding. And remember, when you borrow from your policy, you're not emptying it. The cash keeps working in the background as if nothing left. Meanwhile, you send the borrowed dollars off to earn more income somewhere else. It's like cloning your money. The banks know this. That's why they own billions of dollars in permanent life insurance themselves. They call it bully bank-owned life insurance. If it's good enough for them, maybe it deserves a second look from you. But even with these five powers, there's still a catch. Inflation. A whole life policy grows steadily, but not fast enough to outrun rising prices on its own. That's why the smartest play is to combine it with other assets. Use the policy as your reservoir, then channel that reservoir into things that create real cash flow. Real estate, businesses, even investments in yourself. That's how you turn insurance into a personal bank. Now let's move into real examples of how people have used this tool to rewrite their financial story. Picture a young couple, Maria and James. They're both in their 30s, working decent jobs, and saving diligently. But instead of parking every spare dollar in a retirement account they can't touch for decades, they've been funding a whole life policy. After a few years, the cash value has grown enough to let them borrow against it. They decide to buy a duplex. One side becomes their home. The other side becomes a rental that pays most of their mortgage. The rent covers their loan repayment to the policy. Their equity in the duplex grows. Their cash value inside the policy grows, and their monthly stress shrinks. That's not just saving money, that's building wealth in two directions at once. Now consider someone older. David is 50 and wants to start a small business. Banks aren't eager to lend to him because his credit score took a hit during the last recession, but he has been faithfully funding a whole life policy for 20 years. The cash value is sitting there, waiting. He borrows from it, launches his business, and because the repayment terms are flexible, he isn't crushed during the first slow months. His business gains traction. His policy keeps compounding. He has effectively used his past discipline to buy freedom in the present. The flexibility doesn't stop there. Think of a family with kids heading to college. Instead of draining their savings or piling on student loans, they borrow against their policy to pay tuition. No bank paperwork, no 20-year repayment plan. The loan simply balances against their policy while their children graduate debt-free. That's an inheritance of opportunity, not just money. Now let's zoom out. What these examples share is control. Too often, traditional financial planning feels like handing over the steering wheel. Banks set the rules. Employers set the retirement plan menu. Governments set the tax code. But with the Bank of You, you get to be the driver. You decide when to borrow, when to repay, and where to put the money to work. And there's another quiet benefit people don't talk about enough: psychological freedom. When you know you have access to a pool of capital at any time, your decisions change. You're less afraid to seize opportunity, less stressed when emergencies pop up, more confident in saying yes to growth instead of clinging to safety. That shift in mindset alone can be worth as much as the money itself. Of course, no tool is perfect. A policy like this requires discipline. It requires regular contributions. It's not a shortcut, it's a long-term system. But so is planting an orchard. The tree you plant today may look small, but in 10 years, it feeds your family. In 20, it feeds your children's children. That's how wealth really works. The banks understand this. They already use permanent life insurance as part of their own balance sheets. If the largest financial institutions in the world are doing it, the question is not whether it works. The question is whether you want to play the same game on your scale. So here's the real lesson. Stop thinking of life insurance as a boring bill you pay each month. Start thinking of it as your silent partner. A partner that compounds quietly, lends generously, and protects fiercely. And once you grasp that, the choice becomes clear. You can keep playing by the bank's rules, or you can become the bank yourself. So here's where we land. Building the Bank of You isn't about chasing the hottest stock or timing the market. It's about creating stability, freedom, and control over your own money. It's about making choices without waiting for permission. If this video sparked something in you, hit the like button. Subscribe so you don't miss the next strategy we explore together. Drop a comment below. I'd love to hear your thoughts or your own story of financial independence. And if someone you care about could use a new perspective on money, share this video with them. I wish you the best of luck on your journey. Remember, you don't have to play by the bank's rules when you can create your own. Check out the other videos on this channel for more ways to grow wealth the smart way. I'll see you in the next video.